what's going on, guys? Welcome back to the YouTube channel. Look, in this video here today, I'm going to give you guys insight and kind of carry on from the last video I made on exchange-traded funds. One of my favorite exchange-traded funds to trade ever in my entire career is the VXX ETF. So, in my career trading on Wall Street, and a lot of Wall Street traders that trade markets, we depend on volatility in the market. So you see a lot of people, and you hear me on this channel talk about these things, that volatility is bad, that you want to buy and hold, and you want to ride the trends. I definitely don't believe in those concepts at all, which is kind of why this website is called a long vol. So during my career, even today, I like volatility in the market. So what I'm going to show you is an absolute direct way to trade the idea of volatility. So my name is Dan Bustamante. I'm a former proprietary trader on Wall Street, and I run this website, thelongvol.com. So make sure to subscribe. I'm going to get into and show you some cool things that I use to trade the VIX in this particular video. So let's get started. So like I said in the prior video, I was talking about ETFs. Okay, now the world of volatility trading, I want to be real clear with you guys on this, is pretty complex, right? If you're working at a prop desk, if you're at a bank desk, Citadel, First New York, whatever these larger firms, and all you do is trade volatility, there's a whole world of volatility-based products. You have the VIX futures, you have, UVXY, you have VXX. There's all these different products you can use and different ways to structure volatility-based trading. But again, for most people, the average investor out there that's not trading with $500,000, or you're looking for something that you can kind of just run a simple strategy, that's what I'm going to focus on in this particular video. So the VIX ETF essentially is trading futures contracts on the VIX. And there's a lot of these ETFs. I want to be real clear with this on these video. A lot of people seem to get this stuff mixed up where they look at SVXY or UVXY, and people think that these are better ETFs. Okay, I refuse to trade anything but the VXX. Okay, and I think there's some levered, I don't know if they're around anymore, but I think they were levered VIX, like a triple levered. I might be wrong on this, but I'm pretty sure there was, and I think I am right on this, or somebody mentioned it. A lot of these triple leverage ETFs don't necessarily give you more rate of return, okay? If you compare the options moves on the VIX versus other products or triple levered, the rate of return on the equity options is almost identical, if not better, on the VXX. So whenever I think there's a situation in the marketplace, whenever I think that we're going to get a volatility spike where the market's going to get fearful, I'll come in and trade the VXX. It's one of my favorite products. I've been trading it, I don't know, for the past 8-9 years. I like to trade this thing. I also trade the VIX futures here and there, but most of the time it's just VXX. Let's just kind of get into the chart. Okay, so if you look at the VXX, right, this thing spiked back in November. Obviously, January had this massive spike from 17. March, pretty much all year, you're getting these vol spikes. Okay, so the market gets fearful. Obviously, it makes sense. This is a good year for this, and you're getting these volatility-based spikes. The way I trade is pretty simple. Number one, I don't hold a position in the VIX. And let me be real clear on this. By definition, this might be too complex for this video. This product is a time-decaying product by the way it works. So by design, it's designed to trade lower. Okay, and I know it's complex. I'll get into it in a different video maybe. So I don't necessarily buy the shares and hold them, or I don't buy call options that are out of the money and I hope and pray. I'm like, oh, I'm going to hedge my portfolio, and I don't trade it that way. I look at it from a very specific lens. If I think the market's ready to have a vol spike, I mean, I think S&P is going to sell off, 100, 200, 300 points, I come and look at this product. Then from there, if I think that's going to happen, I'm using at the money and sometimes out of the money options that are 60 days or less to literally just capture a volatility-based spike. The reason this works and the reason I like this product is this thing will move 20, 30, 40, 50% in a matter of days. I don't have to buy and hold this thing for 2 or 3 months, nor do I sit there and put it in my portfolio, like I said, and hold it waiting for some catastrophic event to happen. So this is one of the ways I trade it. The second way I trade it is this, and it's not all the time. It really depends on the situation. Back during the COVID times, this is probably the last time I think I did this. There's certain situations where the volatility spikes on this, where it gets overextended. I was kind of cautious to say this, but I want to be, transparent with you guys in these videos. I'll come in and sell naked call options on this particular product. Not all the time. It has to be a really, really ridiculous volatility-based spike. The downside of that is this. You need to have an account size that allows for you to have the margin to do it. If it goes against you, you've got to be able to, keep posting margin. But it's a strategy I used to use in my professional career, rather. Sometimes I still use it. But for the average person trading the markets, the most direct, simple, non-complex way to do this is, like I said, If you think there's going to be a vol spike coming, you want to use a short duration call option, trade the thing and get out of it. Okay, this is not a product you hold for 2 months, 3 months. It's something you're trading for maybe 2 hours to maybe 3 or 4 or 5 days. Okay, so that's the way I trade this particular product. I really talk about a lot of this on my other website. I have a training thing that I talk about called Small Account Tactics, where I teach people to trade equity options. A certain section in that particular course talks in depth about trading the VXX. I'm going to link that below for you guys if you're interested in learning more about that. But hopefully this gives you guys some insights today. If you have questions, comments, throw them in the comment section below, and I'll see you guys in the next video.